There is a narrow stretch of water most people have never heard of, but if it were suddenly closed, the global economy could feel it within days. This is the Bab el-Mandeb Strait, a choke point between Yemen and East Africa, connecting the Red Sea to the Gulf of Aden. And through it flows one of the most important trade routes on Earth. Now imagine this: the Houthis, an armed group based in Yemen, successfully shut it down. No ships pass, no oil flows, no container traffic. What happens next? Because in today's world, global trade depends on fragile pathways. And when one of them breaks, everything starts to move. This is Wired Wanderer. The Bab el-Mandeb Strait may look small on a map, but its impact is enormous. Every year, millions of barrels of oil and a massive portion of global trade pass through it. It connects the Suez Canal, the Red Sea, Europe and Asia trade routes. Roughly 10 to 12% of global trade moves through this corridor. That includes oil and natural gas, consumer goods, food and raw materials. If this route closes, ships cannot reach the Suez Canal, and that forces a major change. If the Houthis shut down the strait, the first reaction would be shock. Shipping companies would stop sending vessels through the Red Sea. Insurance costs would skyrocket overnight. Some ships might already be stuck mid-route. Global logistics systems would scramble. Within days, oil prices would spike. Shipping delays would begin. Markets would react. But the real problem is what comes next. Without Bab el-Mandeb, ships must reroute around Africa's Cape of Good Hope. That adds 10 to 15 extra days of travel. Massive fuel costs, reduced shipping efficiency. For global trade, this is a nightmare. Fewer goods arrive on time, shipping capacity drops, costs rise across the board. This is how a single choke point disruption spreads into the global economy. Energy markets would be hit fast. Oil from the Middle East heading to Europe relies heavily on this route. If blocked, supply tightens, delivery slows, prices rise. Even the fear of disruption can push oil prices higher. And oil is not just fuel, it's transportation, manufacturing, food production. When oil rises, everything rises. This is where it becomes personal. Higher shipping costs plus higher oil prices equals inflation. We've seen this before. When supply chains break, prices follow. You would likely see more expensive groceries, higher gas prices, increased cost of goods. Even if you never hear the name Bab el-Mandeb again, you would feel it in your wallet. Europe would be hit especially hard. Why? Because it depends heavily on Middle Eastern energy, Asian imports. The Red Sea route is critical for both. If that route is disrupted, energy prices rise faster in Europe, manufacturing slows, economic growth weakens. This could push parts of Europe toward recession. A prolonged closure would create something worse, a shipping bottleneck. Ports would become congested, containers would pile up, delays would ripple across supply chains. This is similar to what happened during COVID, but caused by geopolitics instead of a pandemic. And just like before, businesses struggle. Inventory shortages appear, prices rise. Shipping companies don't just worry about distance, they worry about risk. If the Houthis are attacking or threatening ships, insurance premiums skyrocket. Some routes become uninsurable. Smaller companies exit the market. This reduces global shipping capacity even further, which drives costs even higher. At some point, governments would step in. The Bab el-Mandeb Strait is too important to ignore. We could see naval escorts, military strikes, coalition forces protecting shipping lanes. But this introduces a new danger: escalation. A localized disruption could turn into a broader regional conflict, and markets do not like uncertainty. Global markets would respond quickly. You would likely see stock markets drop, energy stocks rise, defense companies gain, gold increase as a safe haven. Currencies would shift as well. Investors often move into the US dollar, gold, government bonds. In times of uncertainty, capital seeks safety. Not everyone loses in this scenario. Some sectors benefit. Winners: oil producers, shipping companies with alternative routes, defense contractors, commodity investors. Losers: import-heavy economies, retail and manufacturing sectors, consumers. Every disruption creates both pain and opportunity. This isn't just about one strait. It's about how fragile global systems really are. The modern economy depends on just-in-time shipping, efficient global trade routes, stable geopolitical conditions. But when those conditions break, the system strains, and sometimes it resets. So what does this mean for you? Even if you're far from the Red Sea, you are connected to it through supply chains, through energy prices, through global markets. If this strait closes, you may notice higher gas prices, increased cost of living, more volatile investments. But there's another side. Moments like this create awareness, and awareness creates opportunity. Understanding global systems gives you an advantage when they change. The Bab el-Mandeb Strait is one of the world's hidden pressure points. Quiet, overlooked, but incredibly powerful. If it were closed, the impact would spread far beyond the region, because in today's world, trade routes are lifelines, and when a lifeline is cut, the entire system reacts, sometimes slowly, sometimes all at once. This is Wired Wanderer, exploring the forces shaping the future of our world.